Welcome back to MacDev Financial Control for Life podcast. This is exciting, Michele. What are we going to talk about today?
Well, today we're going to talk about the myths around retirement and why people need to incorporate whole life into that plan. What do you think, Steve?
That's exciting. Hey, we always have that joke about retirement, right? With you and
Yeah.
me. What did you used to say?
Well, I must have been about 52 at the time, and I was asking Steve about retirement. What are we going to do? When is it going to be? What were his thoughts? And he said, "Oh, I'm never going to retire. I love what I do." And I said, "I love what I do too, but just so you know, when I reach 55, I'm retiring and I'll send you a postcard from Malta." So I was like, however, that didn't happen. I did keep working because I'm well past age 55. And yeah, we're enjoying ourselves and we've took on new ventures and things have changed and it's all good. I'm happy for the change.
I think everybody has a different understanding around retirement,
Yeah.
and it's not about everybody has to have that vision of not working later in life. I think everybody needs a purpose in life, and I know a lot of people who are working and happy well into their 60s, 70s, 80s.
I think that's an important point, Steve, is that even when you do have the best laid plans for retirement, things do change. COVID happens, people, their lives change, their circumstances change. And I'm not saying only for the worst, but for the better too. Like for us, I'm launching another company. I'm happy about that. I'm glad to do that. We still get out and go on vacation. We do different things. So retirement can look different to everybody. And that might be where you're still in your company for a while and you're still doing things, but you're doing things differently and giving yourself more free time or something like that. Or maybe you're just launching a new company and you're going all out. And that's maybe during your retirement years and you enjoy doing it. And retirement's about doing what you enjoy and having the funds to do it.
And having a purpose. And we have clients who are geared up to get to that stage in life where they want to be able to retire. And it's
Hmm.
my role to help them and guide them. And that's where I get the best excitement around seeing people achieve their financial goals, right? And we've been doing this 15
Exactly.
years. So, but a lot of people, start fixating on certain myths around retirement. And we want to
Mhm.
demystify and help them to know that they can have that goal happen when they decide at a specific age.
Right. So, Steve, what do you think is the number one myth around retirement?
I think that one of the big myths I've seen is a lot of people think that they're going to have less expenses. And what we found is that the Bahama cruises aren't any cheaper. If they like to have nice organic food to stay healthy, is that going to be cheaper? Expenses, inflation, it's all up. And another myth that comes in is they think that, you know what, my marginal tax rate will be lower. So when I start drawing out of my RSPs that now become a retirement income fund, RIF, I'm going to pay less tax. But I know a lot of retirees who have a lot of income. They have side businesses, they have rental
Mhm.
property income. And another myth is that I'm just going to bank on all my RSPs and I know that the markets are going to work out and I know I'm going to have enough money to live on.
Yeah, that's a good point because I know people that have retired early at 55 and they are often surprised at how much tax they're paying. And, if you think about it, when you're younger, you're not paying as much tax because you're not making as much money, I think traditionally. And then when you're older, you're in a higher tax bracket, hopefully. So you're going to be paying more tax on that money. And I think that quite a few people just didn't calculate that in their plan. It's a good point.
Yeah, we want people to know they're not going to run out of money. They're maybe living to 100.
Yeah,
Longevity is in
quite
the
possible.
family. They want to
Yeah.
enjoy their grandkids. They want to go on cruises. They want to be part of their family and do exciting things. They still have a purpose in life. So, we want to make sure that the money is always going to be there. And there's some really unique tools and lots of ways to make sure that they can have that kind of income for their future. And
Right.
that's something that we can talk a little bit about on this podcast is what are some options for people.
Yeah. So what would they do to prepare? What are these things that you're recommending that people do? Is it a a one kind of product thing, or is it a mix, or how do you feel about that?
Well, when we onboard new clients, we always talk about their goals and values around money and make sure wherever they're going to put their money, it's aligned and congruent with their values. So, one value, for example, could be security. What's important to me about money? For me, it was about security. What
Mm-hmm.
about you, Michelle? What was a value that you
Well,
have?
for me, it's freedom. That one's easy.
Yeah.
Yeah,
So, freedom,
it's freedom.
security. uh, Another value could be they want to have constant growth of their money, but they don't want to have a big volatile environment happening. They
Hmm.
want to be able to have opportunities to help others and their family. That could be a value. They want to know that they have options and flexibility when things like opportunities come their way, and they want to know they have capital available. So those values are critical to design the financial plan that's going to help them get and achieve those financial goals.
Yeah, you touched on something there that we've spoken about in the past, and that is, what if you get a windfall? You get a windfall of money. Maybe it's an inheritance. Maybe you got a bonus at work when you retired, or what it may be. But you've gotten a lump sum, and what would you do with that? That's one of the areas you look into.
Well, one thing is you want to kind of protect it from tax.
Good idea.
You want a big lottery, that's a great problem to have, or a windfall or inheritance. We want to make sure, like I said, it's got to be protected. You want to make sure it's tax efficient. You want to make sure that money is going to last long and maybe it's going to pass on to other loved ones, right? Other generations. So
Hmm.
we do a big review of where those dollars can go and give lots of different options to diversify. At MacDev Financial, we are holistic and we look at diversification and we look at different options to make sure that maybe we are taking on a little bit of risk based on your risk tolerance that you said you have.
Hmm.
But we also have other dollars in secure guaranteed environments that
Oh,
are
okay.
not
Right.
going to be up and down, right? So we have to
Mhm.
make sure the risk tolerance is critical in terms of where to put that money.
What if you had a scenario where you've got someone in front of you, and they're going to be retiring, say, in 20 years? They've gotten a windfall, say, of $250,000, and they want to protect their family, their business, and say they have a business that's bringing in 1.5 million a year, and they're coming to you for retirement planning. What kind of things would you recommend that someone like that go into, and knowing that everybody is different, so this is not like a you know one product fits all or one plan fits all. Everybody will have different needs and values around their money.
Yeah, so we'll look at a timeline, like you said, 20 years. We want to make sure that we can show some projections. We don't overpromise. We want to make sure that if there's a milestone, a specific goal, we want to make sure that we can get to that goal.
Hmm.
So we'll put the money into some very secure areas to produce income without having a lot of volatility, as I said earlier. So we'll use life insurance, whole life insurance as one tool.
Okay.
We also may be using segregated funds also if they want to have a little bit of market and a little bit of growth with some volatility, but they can withstand that. We want to look at being able to provide cash flow. So we want to be able to have this whole life product be able to provide income or cash when they need it to grow their business, or maybe it's a personal expense that they have. They want to achieve that goal and they have
Hmm.
capital available for that. One thing that people need to understand is like having whole life insurance is also a cool retirement tool that should be explored because it has a lot of advantages that people need to understand, that it's not just when you're gone. You can actually use the living benefit and use it as
Exactly.
a retirement tool that we are really excited about because that's what we're building on as well for us. But it's really neat because it can be used as an income stream later in life too.
Yeah, exactly. And that's the important point about having that whole life policy, that participating whole life policy as a foundation to your retirement. And I think even more so for people who own corporations, there is a product that's specifically designed for retirement within a corporation. Could you just touch on that a little bit and how what that looks like?
Yeah, it's known as insured retirement planning, IRP, or corporate whole life,
Hmm.
where a corporation, like you said, has that 1.5 million and there's surplus profit left over. And if they continually put those dollars into taxable investments, such as nothing wrong with these investments, but mutual funds, real estate, safe funds, those
Hmm.
will be subject to tax later on the death of the owner of the company. If they were able to actually put some of their surplus into tax exempt whole life insurance,
Right.
it would have that tax impact later. And then there's tools that we can teach to actually use the cash values or equity of that policy as an income stream for the corporation. So the corporation could have income,
Hmm.
or we call what's called shareholder borrowing, and we actually can create an environment where the person of that company can have it also for retirement income.
Oh, that sounds like a good retirement solution. That sounds
Yeah,
great. Yeah.
it's creating your own little pension, right, within your company,
Mhm.
and
Yeah,
not to take away from RSPs and other things that company owners are doing. It's just diversifying and looking at how we can keep those dollars safe and secure. And you know what? When someone does pass on, it's a double tax system in Canada. What's happening is basically there's going to be tax on the shares of that owner. And then when they
mhm,
want to get money out to the shareholders or family, there's also tax on the dividends. Whereas
right.
with life insurance in the corporation, 100% of that death benefit goes into the corporation tax free. And then the estate and shareholders can use what's called a capital dividend account to get that money out also to family and that's shareholders. So we're talking
Excellent.
more advanced stuff here, but
Yeah,
it's exciting to talk a little bit about, just get some things in your head percolating a little bit about people that have joined our podcast who are business owners, that there's some pretty cool things you can be doing also with whole life in your corporation.
right. Yeah, and I think that when people, I've heard this many times. Well, I have enough real estate to take care of my family. I have enough of this or that. Yet they don't have that product that is tax exempt, that is a preferred product to manage things that come up after someone passes away. And it's, I think by my age, you've gone through. A few funerals and you do learn that there are quite a few expenses afterwards, and what people don't realize is the capital gains tax on real estate. And what happens is, I had a friend where suddenly they had a $400,000 tax bill on the real estate because of the capital gains on it. If you buy something for $200,000 and then by the time you pass away it's worth 2 million, that's a lot of capital gains. And in Canada, it's what, 50%?
Yeah, well said. Very good. Yeah.
That's a
So
lot of money that's
two
going to the
changes
government.
and more money for the government, right? So
Yeah.
it's going to be a boatload of tax later if you have all your money in those investments. I'm not saying
Yeah.
it's wrong with those investments, but we got to diversify also to preserve and pay tax. Life insurance is used to pay tax and preserve.
Yeah, exactly. That's what I was going to say. They didn't have that. And like, so I've seen what's happened is, the family cottage that they've loved for generations suddenly has to be sold. Um, Another property that they thought they would move into, but can't afford the capital gains to pay for it. They have to sell the property. And that's the only way out. Whereas when you have this tax exempt product like participating whole life, where you could, get that money into the beneficiaries, then they could use that money to pay those kind of things. It's just something that does get neglected in that estate planning process that you take care of.
Yeah, you want to be able to avoid probate and get the money in the hands of the beneficiaries.
Hmm.
The unique tool is segregated funds. So if you are moving RSP money, maybe out of the bank, you want it to be more preserved and create some estate planning. Segregated funds are a really awesome vehicle to also investigate and learn about that we also manage. annuities for somebody who has a lump sum of money and they don't really care about what kind of growth they're getting, just want to know they have a paycheck coming to
Mhm.
them and
Yeah,
they your entire life.
yeah.
It's kind of neat because they have this nice little paycheck coming in, and it's amazing because we just want to make sure that the client has that income stream. So retirement planning talks about your cash flow in the future. We talked about that myth about expenses decreasing. Well, we have a full financial plan we designed to put in future expenses and future income based on your retirement and inflation so we can start running the numbers to see, hey, are you going to be short here? Do we need to do this and tweak it and figure out maybe on putting some more money in another vehicle? And then
Mhm.
you say, well, we're going to need, 10 grand a month or 7 or 8 or whatever it might be. We can figure that out now. So when we get to that point where you are no longer working, you know that you have that income to replace that
Yeah,
hole.
and that's an important point is that you have the peace of mind knowing that you have what is needed to retire. So that you're not at age 80 going, "Oh, I've run out of money, now I need to work again." So you want to make sure that all those things are incorporated into the plan like you said, where we're going over all of the things that people want to do in their retirement. What kind of money is going to be needed for that? Where are they sitting now? Where do they need to go to? And how will they get there? And those are the kind of questions that you answer for your clients because you have a mix of that par whole life, that's the tax exempt product upon death, and then you have the other products as well that provide security for that retirement. Whereas, we do know with real estate, it's not always secure, that the markets do go up and down. What if there's a market crash when you're trying to retire at 65? What if COVID hits?
Yeah.
What if, something like that? We've seen it. There is a history of all this happening, and it's something that as financial planners like you are, you are taking that into consideration, whereas in the past that wasn't considered. And we sure have seen quite a few 71-year-olds quite dismayed when they have to take out a riff.
Now,
Maybe you could touch on that.
they
what
have
what
to do a RIF because that's just a government rule, and their RSP becomes now an income, and they
Yeah,
have to convert it to RIF the age they're 71 by their birthday of 71, and then they have a year to take that money out before December 31st. They turn 72, whether they need the money or not. And I have plenty of retirees clients that don't really need the money, so they are making good money in other places.
yeah,
It's just a reality. So,
yeah.
you know, we just got to factor that in, and we'll figure out, some OAS. Maybe that's delayed. Maybe there's going to be clawbacks. We have to figure out some strategies around that, also on what income they are taking. Um,
Right.
it's just engineering it the right way and making sure.
Redirecting it, maybe when they do have to take it out, maybe redirecting it to something else if they don't need the money. And
Yeah, structuring it, right? Exactly. Like lots of wealthy individuals have a lot of money they will not spend while they're here living on this beautiful planet of ours. And they want to make sure it's transferred to their loved ones, and that's adult children, grandchildren, great grandchildren. And whole life insurance is a really amazing tool. There's a cool book that Garrett Gunderson wrote called What Would the Rockefellers Do, that talks
yes,
about generating that multi generational strategy where that wealth can be transferred, right? Each
yeah,
one of these individuals and his families have life insurance, and we're all going to pass on one day. So that money is flowing to somebody tax free. So that's kind of cool when you start thinking about, hey, how can I maybe push some of this money into other places because I'm not going to be using it all, right? So that's something we also investigate with clients when they want to start looking at that
right.
generation.
And another place is a charitable
Yeah,
um, donation, or where you set up a whole life policy for a charity, right? So some people might want to leave money to a charity, and you could do that with participating whole life as well.
you could have multiple beneficiaries.
Mhm.
There's a single pay product in Canada where you could just do a lump sum to a charity, kind of
Right.
an innovative, neat idea if you want to pass on money to places that are dear to your heart,
Hmm.
and to your families, of course. So yeah, we can have a different mix. A lot of clients have different mixes of beneficiaries, and some can be obviously um, charities, right? So
Right. Perfect.
yeah, I mean, at the end of the day, I think it's just making sure that you get the right planning in place and you have the right advisors that are looking at your situation, making sure that your goals are there, your values are there, and doing a full comprehensive review of what's going on with your money. Everything. I'm talking even your income, expenses, and what you're spending. Do you have destructive expenses? Do you have debt? We do a lot of work with clients on debt elimination and freeing up cash flow so that money can be more productive and putting in environments to build wealth, whether it's like we talked about whole life and other investments that we also help manage, right?
Thanks, Steve, for all that great information today. And now I'm left here going, okay, so once someone has gotten this into their head and they're ready to move forward, what are the kind of things that they need to do to start this process?
Yeah, we want to be able to bring on more people in the MacDev family. That's what I love doing every day is looking at where you are right now financially. What are your concerns and goals around money? What is your timeline? You need a bit of a runway if you're looking at a retirement stage in 10 years, 5 years, 20, 30. Let's start
Mhm.
looking at the math and start figuring out your financials. So we have a really amazing intake process at MacDev Financial that we allow you to go through your goals, kind of
Mhm.
looking at your big financial picture and start answering, okay, what are my concerns? What are my values?
Yeah.
I'm certified in cash flow behavior also. So we have this amazing software that's free for you to kind of go in and put all your financials, income, expenses, liabilities, assets, insurance products, you have all that. And then we just pressure test where you're at and we start to look at your situation and
Mhm.
then I come up with recommendations based on where you are now and where you want to go. And that is obviously going to be some retirement planning if that's where you're at, or you're just starting out. We have clients of all ages. So we
Yeah.
just, yeah,
I was just thinking that. I know of a client who's starting to already plan for the retirement of their child. It's like going right through from education all the way through. And that's an important point. It's never too early to start. It's not too late to start either. Yeah, we have the runways, but you've been pretty creative with some of our clients that are older and needing those retirement solutions. So
yeah. And then you know what? You just book a 30-minute discovery call, right? See the link there and you just tap into my calendar, and then we'll be able to have a nice conversation together through Zoom or on the phone, and then we'll start working together and helping you out. That's the main thing.
perfect. Thanks so much, Steve. That was a
Yeah.
great podcast. Thanks, everybody. Thank you for joining us. And we'll talk to you next time.
Thanks again.
Bye.
Bye.